Hello, everyone. Today, we will analyze the main assets of the commodity market, look at the current situation, and highlight the key points that I hope will help you make informed trading decisions. Let's get started. And we will start today with silver. On the daily chart, the levels and trends remain relevant. The price continues to move within a downward trend and is currently squeezed into a sideways movement. Sales volumes have dropped significantly. Last time, I suggested two possible scenarios. Either there would be an increase in selling and the asset would continue to fall toward $50, or the price would be squeezed into a sideways movement. And then we expect an approach to the upper boundary of the downward channel and its subsequent breakout. Today, the second option looks more realistic. I would like to see some effort from one side or the other, but for now, there is a lull in the asset. Now, let's turn to the hourly chart. Practically nothing has changed since the last review. In the last move to the lower level, there were quite large sales volumes observed, but once again, they were unsuccessful, and the level held. And the current upward movement is not supported by volume. I think the continuation of the sideways movement towards the upper boundary of the channel is the priority direction. In essence, the assumptions remain valid. If the lower level is broken, then we expect to move down to $50. If the sideways movement continues, then most likely the downward trend will be broken, and we will observe the birth of a new upward movement. Therefore, for those who are in long positions, I will remind you that the asset is in a downward trend and moreover has broken through an important lower level. I can't say anything positive yet. The only thing that can save the position is further sideways movement and the price breaking out of the downward trend. And for those who are in short positions, the situation here is a bit simpler. The price is in a downward trend and a continued drop in the asset's price is much more likely. Next is oil. On the daily chart, just as I assumed in the last episode, there was no test of the broken level. The price continued to rise and reach the historical gap, after which it went into a correction. As for the current moment, I think the main correction movement is complete, since the selling has ended and buying has started to build up. The last move wasn't filled with selling volume, and I think it looks more like liquidity collection, after which it's quite likely the price will return above the local level it passed. Next, let's turn to the hourly chart. To start, we need to mark the local downward trend. A couple of days ago, a price gap was left that needs to be filled. And if this isn't done in the near future, then it might only happen after the price breaks out of the downward channel. Also, the volumes of the recent movements show a predominance of buying. So far, everything points to the asset's price only going up from here. But for that to happen, we need to break the current local downward trend. I'll mark my chart expectations. So for those in long positions, the global movement is on your side. But locally, the price is still in a downward trend. I think this movement has reached its bottom, and from here, I'll be expecting a resumption of growth. And for those in short positions, the price breaking out of the current downward trend will be a signal to close your current positions. Next, let's analyze gold. Looking at the daily chart, after the last review, I re-examined all my data because the situation isn't entirely clear to me. Practically nothing has changed in terms of price movement. The price continues to move sideways within the boundaries of the downward trend and is pressing against the $4,000 level. Buying and selling volumes are currently at the same level, so we can only wait for one side or the other to show their strength. I, for one, expect a resumption of the upward movement and a break in the current trend. Looking at the hourly chart, the price is also in a sideways movement. The last push upward is not supported by volume, which makes me doubt that the growth will continue. In such a case, the sideways movement usually continues, and for growth to occur, even more buying volume is needed, which I don't see at the moment. All in all, I consider the continuation of the sideways movement towards the upper boundary of the downtrend to be a more realistic scenario. Therefore, for those who are in long positions, I also believe that an increase in the asset's price is the priority direction. The price dropping below the $4,000 level will be a signal to reconsider the direction. And for those who are in short positions, the price breaking out of the current downtrend will be a signal to close positions. When entering a trade, don't forget that the asset is in a global downtrend. Well, that's roughly the development of events I'm anticipating. And if you think otherwise, let me know in the comments. And don't forget to like and subscribe to the channel so you don't miss future reviews. I hope I've been very helpful. And don't forget, we propose, but the market disposes.